Alrighty, Doc here from North America. Good morning, good afternoon, good evening. It is Friday, TGIF. Looking forward to that. We have nice, warm, and sunny weather. It is good times for all, as I would say. But obviously we know that not. Let me just tell somebody. Just started webinar. So anyway, you can see that the starting off, was it King Dollar is slipping, sliding just a little bit there. Let's see, right there, that is the 25th, no, 22nd, there it is. Feeling the pressure just a little bit down. But then I noticed at the same time the pairs trades, oh, and you can see the same thing on J4X too, same thing, moving down a little bit, but a little bounce coming right there, which is curious in its own right. And at the same time, looking at the pairs trades, I saw them this morning. Let's go to them now. But the last I saw, all the, like, the euro was down against the dollar. You can see it right there. You can see it, the cable down against the dollar right there, just a little bit, nothing major. They're just kind of little drift. Even the yen I saw, down a little bit. Well, that's been down for 4 days now. So we see that pressure on the product, or let's say we see pressure on the dollar on the upside a little bit. And then I was looking at the stock indices, and I was thinking, I was looking at the currencies, and I was thinking to myself, wow, look at this week that has played out, especially with the euro. There's the euro, and to a great extent, there's Monday, Tuesday, Wednesday, Thursday, Friday, and you can see, right there. I mean, we at one point this morning we started to drive itself back down to that again. I was like, wow, that's a real surprise. So in other words, they're trying to give up the gains that they had, but then it stopped. It cooled off. But then look at the cable. Let's just widen that out on the cable, and we'll look at the bar charts here, and you can see here same situation. Same situation. I mean, it was down below the closes of the week at one point this morning. So they were all trying to do this little internal, or short-term correction, I guess you could call it. And I guess that's the best way to describe it. It's like a short-term correction. Intraday, short-term, 24-hour. In this case here, it's been the whole week. They keep on finding ways to drive itself back down again after lifting up. But to me, and then I thought to myself, I was talking with Janos about some of this stuff, and then at the same time, I saw. Let me go to the chat line too. I just realized I don't have the chat line up. There's Robin, and there's Metho 2000. Hello, guys. How you doing? And then I was thinking about the interest rates. My mind went right to the interest rates. And let's just check out the interest rates here. Check out the 30-year bond in the U.S. I mean, they spiked that puppy. Look at that. They spiked it yesterday. Look at it now. I mean, when this thing rises, interest rates are dropping. And then interest rates in the old days, as you can see, they're at the top end of the range. But interest rates in the old days, used to have a great influence over pairs trades. A combination of inflation and growth and all that other stuff, And we're seeing the same thing with the shorter term, the 10-year. That's the 30-year we just put up there. And then the 10-year, same situation there too. It's trying to get towards the top end of this range for like the last 4 or 5 months since April. Well, 3 months for sure. And so it's kind of interesting. King Dollar being King Dollar. I keep on saying I think that we're in the summer doldrums. Hey, Robin. It's the summer doldrums, and at the same time we've got all this politics going on. I mean, just tons of politics. I mean, our leftists in America are really going nuts at this point. They just, one of them tried to kill the gubernatorial, the guy that's running for governor for the New York State. Walked up on a stage with a blade and tried to cut his throat last night. I mean, it's just crazier and crazier. And we've had this stuff, the violence all the time. Someone tried to kill these crazy leftists tried to kill a Supreme Court justice about 2 months ago, going to his house with guns and so forth and so on. He was going to try to kidnap him. He had ties and tie his hands up and so forth and so on. They're just losing it. They're totally losing it. They hate free markets. They hate free people, and they hate free ideas. And they just refuse to accept anything but their way or the highway, I guess you could say. So no wonder the markets are sitting there stalled. Wilco, I don't know, Giannis, if you're listening. Wilco's texting me. He says he's playing billiards. I guess it's that late in the afternoon on a Friday. So, but in the end result is that we have some really strange times going on when it comes to the marketplace, and luckily our math takes us through this, and we have J4X set up there so that it gives you a fighting chance to understand it better. We've been talking about intraday markets, investing versus trading, and we've been doing that for the last couple of days. I find it all, it's always, to me, enticing and interesting. I'm always enjoying that type of conversation. I love questions, and I love to look at different ideas, and you never know when a good one comes along, and generally you have a half-decent idea when a bad one comes along, but you never know until you hear them. You got to hear them first, before you condemn them. And that's pretty much where we're at this point. We must hear them before we condemn them. And I'm always happy to hear somebody ask a question or, bring up a subject or, something of that nature. So, let's see, where else are we? So let's, as I was saying, I found it fascinating that the currency pairs, let's see, where's it at again? There's currencies. Excuse me. The currency pairs are doing their best to basically go sideways all week after that pop on Monday. Excuse me there. Take a sip of my water. And no chewing gum today. I realized that someone thought I was eating something during the conversation. So sometimes I have gum in my mouth. I like chewing gum. And so that's where we're at. You can see it right there. And that's the cable. And then when we look at the euro, well, that's a little bit stronger, of course. There's Friday, but there's Monday and there's Tuesday. And then the low today is, what is that low today? 101.29. And yesterday's low was like 101.53. So it dropped underneath yesterday's low. It dropped underneath Wednesday's low. We're looking for 0.0129. So it's basically 12, like 13. And then you can see here, it finally gets down there on Tuesday. It plays with that low. It plays with Tuesday's low, which is interesting. Markets don't have much of a choice at this point. They really are stuck in the summer nature of the marketplace itself, where we get into this 4 or 5 week calm, and it's been going on for months really now. We've had a really good stock market lift, for the week. You can see here, where's it at? Let's go over to the stock markets. I'll put it up on J4X too. Let's go with the S&P 500 as a good standard bearer, a good solid stock index to stare at. It's like the world index in a sense. You can see here it's been running up for days upon days, and basically for weeks upon weeks. It's been showing, like a couple of weeks now, it's been showing strength since late June. It's found the bottom. Excuse me. And so then you can see it right here. Same situation. We went into that buy right at the bottom on a daily, but it took time. It couldn't get into the weekly buy that week at all, and then it fell back down again, and it oscillated and vacillated sideways, and now we climbed into the weekly buy last week, and we were in a daily buy, and you can see it's just been a rip-roaring nice move of I guess like closed on is that it right there? No, that's the close of Friday. So last Friday it settled at 3,866. Let's call it 67. 3,867, and here we're trading at almost at 4,000. So 135 points in the S&P 500 is a big move. It's a very powerful move, very impressive. So money is trying to come in and nibble. It's doing its dollar cost averaging thing. It sees that the range here is being pierced, and we can even see it in the cryptos when we jump over to. Let me put where's it at? Let's put that up there. I'll put the snapshot I just sent out of it to Wilco. Let's see. Wilco is a presenter on Dukascopy back in yesteryear, many years ago, and we chat every so often. Anytime I have a question about cryptos over the decade, I've always gone to Wilco. He's basically deeply involved in all of them. I myself just pay attention to Bitcoin and the coin one. Let's see, where's it at? It's around here somewhere. There it is. There we go. So you can see here the product is right there. You can see it's been sideways for a couple days, but it's climbing into a weekly buy. It's looking very healthy. Whereas the where is it at? Right there, Coinbase, which is the stock. Let's see if I can get this by just moving over to it. There it is, right there. Whereas Coinbase, it should be Coinbase, isn't it? Yeah. And that's Coinbase, which is the stock of the cryptos, where they trade them on exchanges. And let me get rid of that. And you can see here, it's been in a weekly buy for, this is the third week that's been in a weekly buy. It joined in with that bottom back in here, when the stock indices tried to start turning up. Let's go back to that real quick. Let's minimize that and then go there. And there it is. That was back in, I guess it's like June, middle of June, where the stock indices made that new low and started to, just trying to turn up in there. And so we're seeing that type of action now. We're getting that flavor of it all. We've been talking a lot this week. I have an attitude today that I want to talk about what our week was like. I don't know why, but I heard somebody talking about the mistake that Mnuchin made about not floating bonds at super low rates for 4 years as Secretary of Treasury. And I was thinking to myself, that would have been a real poor job of in other words, governments are not supposed to be destroying people's assets. They're supposed to be letting markets be free here in America. And so he was tempted to have 100-year bonds where he could get interest rates at, like 3% forever, or float more 30-year bonds at 1.25% instead of 3% now, that type of thing. And I thought to myself, I respect Mnuchin, the Secretary of Treasury back then under Trump, for not doing that. I thought it was a great business deal to do. But the problem is America is not in the business of being a business. It's supposed to allow individuals to be the businesses. And so if the government had taken even more advantage than they already have over the population, it's kind of like a drag. I kind of find that as a negative. Now, as an investor, if I was thinking of the American company, USA Inc., incorporated, yeah, that would have been great. But the problem is it's not. It's supposed to get out of the way. We don't need government spending all this money and printing. We have inflation across the planet because of it. Under Trump, they didn't pump the dollars as much as they did spend, but they weren't doing it as insanely as they're doing it now. And so that's to me, I just felt like I called it state-sponsored terrorism, basically. That's the way I thought of it. It's like, don't trap people into bad investments as a government. Do it the opposite. Allow people to invest and trade, be free, for better products. That's what the Securities Exchange Commissions and the Commodities Futures Trading Commission are supposed to be. They're supposed to be protectors of the population. If Mnuchin had put out 100-year bonds and started floating a couple more $1 trillion in 30-year bonds, I think that the Securities Exchange Commission should have been called and said, hey, there's some nutcase out there printing lots of money and floating bonds out there. And it's Uncle Sam. So that's I was saying with Janos, it was like, I really hated that conversation I saw on the Financial Channel. I thought, wait a minute here. Government's not supposed to hurt the investor. It's supposed to help the investor. And we here, we try to do the same thing. Try to help people who are trying to invest or intraday trade. I've been saying intraday trade now in a couple of titles for the last couple of days because we are very active on all levels. And we talk about that on technical tools, and we show it to you live. We don't do it like delayed. We show you live trading. And if anybody wants to see what I'm talking about, just say something like, "Show us, Doc," and I'll show you. And then so forth. And that's that. This morning I just saw that and I thought, we're not just going to go look at the dozen pairs trades that we look at, and then we're going to go look at gold and silver and everything, and then oils and energies and so forth, and then walk away. I've been having this conversation now for like 4 or 5 days about intraday trading and tools and techniques, and I just find it, refreshing to emphasize real. I guess it's because this week is the Olympics of theoretical physics. This is our Olympic week. This is the week where all the great theoretical, or let's put it this way, very educated theoretical scientists get together in physics. And this year it's in Vienna. And we zoom in or we show up physically. And proactive versus reactive. Exactly, Robin. We talk about that here all the time. Proactive versus reactive. And, I'm thinking to myself, as I'm doing all this high performance physics and at the same time doing my trading, I'm thinking to myself, if these guys in Vienna this year would only come to the real world and implement their mathematics in real world versus theoretical, or what I've been calling math gone wild this week, they would be better mathematicians over it all. They'd be better physicists over it all. And so, from that, we've been getting into looking at our work, Chicago Quant Technologies work, and the J4X indicators that we set up for it as a real proof that it can be done, what the tools are and how it works. And, Rob and I have been traders for almost 100 years combined together. He's late 40s, me, I'm the mid 40s of years in trading. So it's like 90 some odd years plus put together. Professionally, not counting amateur, where in 77 I was started to trade, oil stocks and stuff like that. And then becoming a member of an exchange. I think Robin was a member of an exchange in 77 or 76, whereas I didn't become a member of an exchange until late 1980. So, that's what we do here. We talk about all of it. Proactive, reactive, and in modern times, you have to be a proactive trader because reactive is almost non-existent. But a lot of people write books and pretend that it's still here today and you can do it too. They do have a habit of doing that, which drives me totally bonkers. So anyway, there it is, the S&P showing strength. Let's take a look at, let's see, that was the stock indices, just the same way as I looked at the currencies. They are showing lots of it. You started in 76? Yeah. See, I didn't get on the floor until 1980. Late 1980. I got hired by the American Stock Exchange in 79. But I didn't. In the end, I chose to go to Philadelphia and got the job there in 80. So, yeah. And the end result is that's where we're at, traders. And if anybody would like to see anything, shout it out. If not, we will go like Metho knows, and Jordan and everybody else that stops in. We will go through the list of things that we look at every day and go from there. So, let's jump back over to the euro and see what the euro is up to. And you can see there, it's just down for the day, nothing major. It is pressing with the daily sell. And as you can see over on J4X, it's probably starting to curve the line, or it's up at the high end. Let's take a look and see. And anybody wants to see any particular product, you're welcome to interrupt me and just take me off into that direction. Yep, you can see it right there. The green line has pierced the dashed line, and we're just waiting to see some red develop with the hinky Ashkeys there on the J4X. Here in Chicago Quant, you can see here the line is already pierced, and tonight, if it closes like this, especially if it gets rid of that green dot there, we will be in a sell. Especially when it's having a red dot there. Now at the same time, you can see that the weekly has been in a weekly sell since here. Our weekly signal. This is a daily signal right there. This is a weekly signal, and we can get as minute as, like here on the S&P 500. Where's it at? Right there. We get into an intraday. You can see it's ticking away live. You know, went into a buy here, goes up in value. You can see it goes into a sell, barely goes down, but does go down, goes back into a buy, goes up in value, and get into some choppiness here. It gets into a sell, goes down in value to from there to down to here. You can see it's trying to perk up, but it's still in the sell. All the way to right here, it's starting to climb into a buy as we speak when it comes to the S&P. And so we do it all. We do it on, you know, a very minute level. I think we have some people that ask for different things. Like, I guess let's take a look at that euro on a short-term basis on an intraday. What was it? I think it was Jordan or Metho, or I forget who was looking at the yen. Let's see if we can change that. Well, we can't change that. So there's an hourly. He was looking at it on an hourly basis. Let's look at it on a euro instead on an hourly basis. EUR. There we are. And that'll fill in, and that'll show you on a shorter term. I myself, we talked about it yesterday, much more into the spatial bars, not really into the Newtonian type of thing. Matter of fact, there's an interesting one. At 3 in the morning, where they pop it up, try to put. That's why we don't trust hourly bars. On a spatial bar, that won't happen. And then you get this big slam an hour later. Whereas when we go into a spatial bar, let's see if we can find you a spatial bar. Let's see, do we have one on here? There's one right there on cable. Let's see what that did at the same time frame. Is that 3 in the morning? Yeah, see it right there. So in this case here, there's that 3 in the morning with what they did to the cable, just like the euro, the same thing. And you know, you got into it failed to get into did it get into a buy? It got into a buy there and went right into the sell, and then caught the rest of this action. I wonder what the euro did. Let's see what the euro did in that same situation. EUR. There we are. Let me just see how many days back that goes to. So we can get it filled. Oh, it's filled in already. It just goes 1 day back. Good. Let's see what the 3 o'clock looks like on that. Or that's kind of like the beginning of the European. Did they raise rates again somewhere in Europe like they did yesterday? So there it is right there. So it was in a buy. Goes into the sell right there after being in a buy. And makes a little money out of it. And then has that nice whack. Look at it. Someone knew what was going on. They start that stuff there. And then there it really plays in. And then it gets into whatever the news was. It gets into a sell here and obviously makes money all the way down to here. And then gets into a buy and then goes back into a sell again on this one. And see how well that does. That's another winner chicken dinner. So someone knew whatever the news was that came out on it. They front-runned it, and that's the way it usually works. Jordan, yeah, it was looking at the dollar yen an hour. Yeah, that's what it was. Okay, yeah. So I don't really care for those hourly charts or 15-minute charts. I like the spatial ones, you know, where the counting, the bars are made up of ticks or a count or a contract, you know, and it's you know, it implements volatility at the same time. It allows that volatility to be compensated for. Whereas when you go back to the hourly, there's the hourly. It's like bam, no chance. By the time you get into a sell, it wants to go back up again. So that's why I steer clear of that, and that's a good example of it. And oh, what's that? What's the smallest margin for copper? at the Ducoscopy? I don't know. That's a good question, Metho. I don't know. But I'm sure it's on there somewhere. I'd imagine that they take slices, like everybody else, depending on the size of the amount of copper you grab. Matter of fact, let's go take a look at copper since you asked about it. Copper was still kind of bouncing around, not able to really get any legs, but you can see here it's trying to get into the buy. It has lifted up above at this point. Let me just double check it with the exchange quotes. Sometimes I don't always trust the numbers early in the morning. Let's see, right there. Let me just see what copper looks like on the exchange floor itself. And copper right there. Okay, so they got copper trading. This is the September contract. And 333. Yep. Okay, so that's good. So that's functioning right. It's up about 1/3 of a cent. That's not too bad. It's trying to lift, but look at this weekly in the thing. It's been. Let's move that over so you can see that better like that. It's been in that weekly sell since the $4 area, so it almost got down to the $3 area, and it's just like it has not been. Buyers have not exactly been running towards it. It's been a. It's the same way with the metals complex, gold and silver, same situation. I think yesterday, for the first time in in over a month, gold. I said it yesterday, and sure enough, like I said, it's 26 days in a sell or 25 days in a sell, something like that. And sure enough, I had not mentioned that at all in any of the webinars for weeks. And sure enough, they put it into a buy. Someone heard that and thought, hey, why not? Let's see. Metho says 20 times 3.33. It doesn't work. What do you mean 20 times 0.33? You mean you want to buy 20 increments of it, of some form, or contracts? Or I don't know if they're trading the future or if they're trading the spot. I think they do the spot when it comes to gold and silver. I really don't know. 20 times 333. What would be? Why are you using a multiplier for 20? What's that all about? What is the 20? I'll let you get a chance to work that, and I just got a text. I'm going to look at that text while you're writing. There you go. No, something's going freaked out. There you go. Let's see what you said. Doesn't work. Yes, my plan was to average it down yesterday. Okay. So you want to buy 20 more at 333? Okay, that makes sense. I mean, dollar cost averaging, as long as you have the staying power. That's the whole idea, is to, do that, And that's usually the way it works. I mean, when you start dollar cost averaging, you've got to make sure that you don't get crushed out of it, I'm just going to answer them, say I'm on my webinar. All right. So yes, every 10 cents down, 20 more. Oh, okay. But you've got to, when you do a dollar cost averaging, what you can't do is put yourself in a position where you can get priced out. In other words, you've got to put it when you come up with 20 times, you have to make sure that you can do it to, like, I don't know, $2 or something like that. Not like down to $3, or then you're not dollar cost averaging right. The idea of dollar cost averaging is to be able to hold the position until it comes back into your spot of a win. And so if you set a price and say, okay, I'm going to buy it from $4 to $3, 20, dollar cost average, and then you get the $3 and you're now priced out and you get taken out, then you did it wrong. You've been better off doing it through options or something like that, some type of binaries, so you don't get priced out. Oh, okay, then you're fine. I would wait for, the thing is, I would wait for some decent signals, like some weekly buy. I mean, look at, where's it at now? Let's go back to it. I mean, to start off with, you're basically buying a counter trend at the moment. It wants to go down. So you should make them wide. If you're going to be in a weekly sell, make them like every, not 10 cents, but like every 20 cents or every 30 cents. Because you're in a downtrend. It's been in a downtrend since the $4 area. We've been stuck in a weekly sell and it won't come out of it. So you're just fighting it. Your width is too small, that 10. You don't want to be buying 20 every 10. You want to be buying something like 10 every 20. The idea is to make money out of it. Right. I understand what you're saying. But you have to know that at the beginning. You can't just do that in the shift of gears. Because then you're going to, chances are, if you get stopped out of that, it'll be because you didn't prepare for that whole smooth average thing. Oh, what's Patrick say? Patrick says smooth moving average 200 is 196. Ouch. That's what the funds watch, right? They watch the 150, Patrick, don't they? They watch the 150, they watch the 50, and they watch the 200 moving same day moving average, right? But but I need some contract if they, yeah, of course. But the thing is that in a downtrend, the chances of it going up are very slim in our math. That's what we show every day here for every month, every year. We've been showing this for a decade. That if we're in a weekly sell, it's going to find a way to be lower in the future. Until it comes back into a weekly buy, it just, it doesn't happen. I mean, look at it. Back in 22, it went into the weekly buy at 430. Okay. Traded up to 460, 470, 490. It found ways to go up. Now, no doubt, it was up at 480, and it finally got into a weekly sell around the 460s area. Okay? Well, by then, if you were dollar cost averaging up in that thing, you'd have been winning all the way. Instead, you're taking pain if you were shorting it throughout that whole event, which is kind of basically what you're doing now. You're shorting against a downtrend. So no, I'm sorry. You're getting long during a downtrend. You're averaging up constantly in a downtrend, which is cool. You buy low, sell high, but it's still not, not good. You can see here it gets down about 65 cents. It gets into a buy and launches itself. I don't know what's that from 420 to 460, over just a couple of weeks, and then back into a sell again. And here we are in the $4 area, 410 area, and we've gotten down to 316. You're fighting the trend, and when you're dollar cost averaging, you don't want to fight the trend. You just want to buy low. And so when you're fighting, I put this out there every day for you to see. So I even send free spreadsheets to anybody who asks for them about the trends themselves. So, you know what I mean? Let's see. Patrick says up. Okay. And I don't like shorting like averaging. Okay. And then Patrick says 200-day moving average, 30 M30 graph. Okay, the GRA M30 graph. What is the M30 graph in technical analysis? I'm sure it's something smart, and I just kind of have lost it. Let's see if we can find it. So it must be a moving average of 30. Because it's not like mass or matter in physics. 30 moving average. Let's see. Average. Let me see what the G. Let's see. Oh, minutes. So it's like a 30-minute chart. That's what you're looking at. Graph, right, up. And then 30 minutes, an hourly 4 hour. Okay, I get it. Yeah. Yeah, so, yeah, you've got to, when you dollar cost average, you've got to try to stay on the right trend at the same time. I mean, you want the weekly buy to be in a buy, and you don't, and every time it backs off, you buy. Not buy and then buy higher, but buy and buy lower and then sell higher. That's the objective out of it all. So when you're buying higher and then buying higher, they refer to that as, on Wall Street, they used to call that as cannonballing. You know, like when you dive off of a diving board with a cannonball and everybody jumps off right behind you and cannonballs and there's a bunch of cannonballing. And they used to say some really rough stuff, like more people have been killed by cannonballing than by Hitler. So, I mean, that's pretty much the way it goes, you know. You know, cannonballing can be very dangerous. Buy high, buy higher, buy higher, buy higher. We have a client that pulls that stuff. He follows our math and he keeps on buying higher, higher, and higher, and higher, and higher. He rakes in big dollars and then refuses to put a stop in. He's been doing that for a couple of years with us. It's like, will you stop that? Keep the damn money. You know, Robin? We're not using any names here, of course, but, you know, we've got a guy that does that. Yeah, exactly. Yeah, we call that cannonballing. That can be very dangerous if you don't use a good stop, you know? And the thing is our weeklies usually keep you in good, honest direction, or it'll knock you out and tell you it's not the right direction. That's usually the way it rolls, you know? Total return buying. Yeah, I'm a buyer as it goes higher, only on pullbacks. Constantly buying pullbacks. Until it tells us not to be in there anymore. But buy low, not buy high. Yeah. So, and that's what we're doing today. Is we're having a conversation about trading and intraday trading and short-term trading versus investing and longer-term investing and so forth and so on. Metho says yes. Cool. And that is the recipe of it all. Let's see. Where do we go from here? And from here, we drift over to, what were we looking at? Oh, I know. We were looking at the currencies, and we drifted back into copper because someone was saying something about it, which is fine with me. It's a Friday. I kind of want to, I want to be kind of dynamic more. Patrick says, yes, it has exceeded the Bollinger Band moving average, and the 30-minute remains below the 4-hour moving average. Same level as the smooth moving average of 200 in the 30-minute. If it goes above it, it's a strong bullish move by expecting the U.S. PMI. Okay. Yep. Let me think. I can throw something like that up there too. If you want to see my math combined with the 30-minute and the hourly, we can do something like that if someone's interested. Sell the strength of the weakness, buy the weakness of the strength. Exactly. Exactly. Yeah. I mean, that's really where my head's at. We got it. Was it the Dow's up 100 points, so they're moving. That's cool. Now, we don't usually look at 30-minute and 4 hours, but we gladly. What product are we talking about? Are we looking at the copper, right? So let's see if we can find. Let's make a copy of this and try to do that. Because I want to have fun today. And paste. Let's see. So there's the copper. Let me just make sure it's in the right spot. Okay, there, it's down at the bottom, so that's good. All right, now let's put let's take a look at a 30-minute instead of a. I guess we're doing an intraday. That's cool. Yeah, so let's do this. Let's put a 30-minute in there. That didn't register in my brain until just now. I am simple sometimes, trust me. Let's see, 30-minute. Took me a while to figure out what M30 was. I was thinking I was outside London. I was near the M25 exit my school was. So I was kind of like, I was in Hertfordshire. So when I saw M30, I'm thinking, M30? Does he mean the M3? Then I thought, oh no, he means moving average. It wasn't moving average, it's minutes. Hey, what a simple brain I have. Let's see, let's try 30 days back. And then we got to turn off there's the 30-minute. Let's do this. Let's turn off. Oh, you know what we could probably do down there? We could probably put the 200. What's that? The 2 hour? Or is that a 4 hour? That's a 4 hour, right? I bet we could put the 4 hour where the weekly is. So let's try that. Cancel. And format. That's a great idea. And let's put the 4 hour. This is interesting. I don't think I've ever tried this. This is going to be interesting. Okay, so the weekly kicked in. The longer term, so it's in a cell there. You can see that. Is it? No, it's in a buy. I'm sorry, it's in a buy. Yeah, it's in a buy. Okay. Yeah, it's plus. See that? 19, a whole bit. Now the daily seems to be really short, so let's add more time to it. This is kind of interesting. I've never done this before. So this is why I'm asking questions. I want people to ask questions because I'm curious at other ideas. There you go. There's 40 hours back. Or 40 days back. That's 40 days back. Let's put 40 days. Let's make 50 days back on the other one. See what that does. There we go. Okay, cool. Look at that. Now, let me kill that volume a little bit on the financial channel. There we are. Is that what that was? The PMI number for Europe at 3 o'clock Eastern Standard Time? And I guess that they were front running that. What time did that number really come out? Let's put 60 in there now. Let's widen that. Maybe we can go like this and do it. There we go. So there's our math there. Goes into the buy there. And does it get in the cell there? No. And it's still in the buy. And it goes into the cell there. And just goes sideways down for. This is 30 minutes. Right now, this is what is this? This is a 4-hour chart down below. So we're running a 4-hour chart here. So it went into the buy in the 330 area and it's still in it. And it's gone up to 336. Let's keep on pushing it back time-wise. Let's go to 80 days. All right. I guess I pushed back too far. I tried to get back 90 days. Maybe I should just do 70 or something like that. There we go. Now let's put that all the way on there. And that gives you a flavor of what's going on. Matter of fact, it goes into the cell here, up in the 332 area, and goes all the way down to 326 area. Interesting. Now let's put more of the daily, the 30-minute in there, so we can analyze it even more. Okay, there's 100 days back. On the 21st, it goes into a buy, falls into the sell right there, goes down in value, goes into the buy there, goes up in value. You get this wild action there. Again, why we stay away from the minutes and hours. And then you can see it zigzags out of it, gets back into a buy, goes into a sell, goes buy. And that time it stays. Probably makes back anything you would have lost over here. And then it gets back into a buy here after a little sell that barely made any money. And that was a cute little win. That's a cute little win on the downside. And then that's a nice, beautiful win on the upside. Goes from the 331 area to the 346 area. That's pretty cool. All right, let me read the tape now and see what you guys said. The Euro PMI fell, but it did not hold. It returned to its level below the PMI. Okay. Thank you, Patrick, for that. That's a good one. D1 Bollinger moving averages around 1.7. Let's put the Bollingers on there, too. I used to work with John. He used to interview me every 2 weeks. Back in the 80s, I used to be on the TV with him. It was called the Guru Review. Before he even had Bollinger Bands. Let's put the Bollinger Band on. Let's see. Let's insert that. Is that right? Am I doing it right? Cancel. Close. Format. Insert. That's it. Study. Bollinger Bands. We have a day chart that we follow. Let's see. Properties. I think it's there. Let's see if it does it. There it is. There's your Bollinger Bands. You can see what we do is, let's do this. We make ours the same colors as his, so it can emphasize it better. So cyan and red. And then obviously you can use the, okay. Then you can use the white histogram as the line. We'll make that a line instead. So what you have is, it gets through, let's put the 0 line in there. So when it goes above the 0 line, you can see here the Bollinger Bands are trying to break down. It's in this minus. It's trading under the center line off. And then we get into a sell, I guess, right here. And it zigzags and does a lot of rubbish. That's what it does. This is the buy right here. So this doesn't, Bollinger, it doesn't get up and break out until here. Ours broke out there, right there, and told you to be long compared to John's work. I call my work a nonlinear manifold. It's a one standard deviation, and I actually have one standard deviations and two standard deviations on charts that you could take a look at and see. And that's what you see when we go to the daily chart. So what you're really looking at is let's go back to the copper on a daily chart. Here's the daily, and you're looking at our manifold, which is competes easily against the Bollinger Band. It's a 1 standard deviation of my mathematics. And then this is a weekly 1 standard deviation of the weekly copper contract. See, so D1, let's see. So the Bollinger Band moving average around 1.75, he went over the top. So this shows that he is not ready to go down again for today in the graphic sense. Okay, let's go back to that then. There it is right there. And so you can see there's the Bollinger Band on the daily, and this is the daily right here. We can move that down and just emphasize it more or match it up more. Let's move the weekly down, or the longer term one down. You can see it like that. This is the 30-minute right here. And this one is the 200, or the 4-hour bar chart of it right there. And that's what you're looking at. So I guess we go like this. Do it the other way around. Push that up like that. Push this up like that. And we use the histogram and compared to a line. It just makes it easier to read. So let's just put the histogram back in there. And you can look at the green line just as easily. The green line is a moving average of the white one. So in other words, it goes above and it goes below. It's moving average of it. So it goes into the cell here, and you can see it takes a while for John's work. Matter of fact, John never catches it. It doesn't break his white center line, but it did touch the top of his band and break down, and it did close below it. So it shows you that pressure. In our case here, it just automatically did the same thing here, and goes into a cell there and tells you that we're in downward pressure for these 4-hour, these 30-minute bars. And then you see it here. It jumps across it. And let's see. So it went into the cell here. And you see how it hits there and falls back down again, gets over extremely sold. And so it just goes sideways in here. And this is our work using a 1 standard deviation. I hope that was interesting. This is why I like talking all of it, daily, weekly. We talk about it here. If you can develop a tool that works, you should know. Let's rephrase that. Developing a tool for short-term trading or intraday trading, or compared to investing longer term, they should all work together. So in other words, the daily tool should work just as well as the intraday tool. The 30-minute or the 2-hour or the 4-hour or the tick or the contract or the volume. And the only difference really is I find, obviously it's very clear, I find spatial bars, in other words, instead of 30-minute or 10-minute or 5-minute or hourly, less accurate. And how can I tell it's that? It doesn't make as much money. It's very simple. That's what's so wonderful about trading versus physics and doing theoretical physics. Theoretical physics is a fantasy. It's math gone wild. And it's extrapolating future possible events that never are tested physically. Whereas in markets, your P&L show you the success all the time. Or failure. So, let's see. So Janos, I think I'll go with this one as investing versus what did I say earlier this morning? I was on this thing. I was on a kick already. Let's see if we can find it. About a name here. And then what's up with this? There we go. And I was talking to Giannis about that because I was trying to come up with a better name. So I guess not a better. Okay, work it using different directions of this. Okay, thank you. I think it was investing versus trading. I guess that's what it was. Where was it? I wrote on there somewhere. And I think that's what it'll come down today. We'll use a title of investing versus trading, not intraday. I'm staying away from intraday. We're staying away from intraday today. All right. So there it is. That's a good one. We'll leave that chart in there too. So in case you want to see other products in that same category and see how it compares up to what you're looking at. And so we also have standard deviation 2 also at the same time with our mathematics. Standard 1, standard 2, we look at it a lot of different ways. But we do it, obviously we just do it a lot of different ways. All right, I think we're going to get out of here. It's Friday. Everybody have a safe and smart weekend. And we will catch you on Monday, which will be, thank goodness it's Monday. And so everybody have a very good Friday. Happy trails to you until we meet again. Hopefully it'll be Monday. Happy trails to you, to all our cyber trading friends. Later, traders. Be safe, be smart.